tell us a little bit about how the volatility in the commodity space is impacting your business and what drove your results.
Well, essentially, 2021 was a pretty challenging year for all sectors, but the volatility in fuel prices did have an impact on us, particularly in our China sector. We saw dramatic increases in coal prices and a shortage of supply as the Chinese economy kicked back and recovered from COVID, but the coal supply infrastructure wasn't able to meet demand. In Australia, we also saw an impact there with rising gas prices. And we are reaching a point in the cycle in Australia where we had a combination of high gas prices and low electricity prices. So that did affect our earnings in Australia. But overall, electricity demand has still been growing, and the importance of investment in the electricity sector is more urgent than ever in order to achieve decarbonisation. So our outlook is a positive one. We see growth, particularly here in our core business, but everywhere we operate, we see a need for continued investment in order to help with decarbonisation.
Will that target of exiting coal, which is, I believe, 2040 for you, will that be impacted at all because of all of this volatility, not only that you saw last year, but now with the geopolitical tensions around Ukraine affecting prices even more?
Well, I would say it's too important an objective for us to drop the ball. Even with COVID and even with all the volatility and the difficulties that we've had with supply chains, this has been a real focus for us, and we've kept all of our projects on track. These have had some enormous changes that we've had to make, and just the difficulties of getting people and getting materials, particularly to us here in Hong Kong, has been incredibly challenging. But these are too important for us to lose sight of. So these are our top priority, and achieving a decarbonised business and having met a net zero target by 2050 is of absolute importance to us. And if we can find ways of accelerating that transition and doing it more quickly, then we will find those and we will put those in place.
Richard, what's the impact of inflationary pressures on that transition? Obviously not just on energy prices, but also things like clean energy equipment.
We've absolutely seen inflationary pressure on prices. Everything is not only more expensive, but more difficult to get hold of. And there are delays in bringing materials. So this is definitely an issue that we've had to manage, and has really contributed not just to our core job of powering economies, but the projects that we're having to work on to help with decarbonisation have also been quite heavily challenged. But essentially, we are seeing a very important and a very fundamental transition of the electricity sector as we decarbonise. New capacity needs to be built. It needs to be working reliably in order for us to close down the emission sources, which is coal-fired and gas-fired power plants. So a huge amount of infrastructure needs to be built and needs to be running efficiently and running well before we can take the steps to close down coal-fired power stations. So that will cause pressure on prices. That will naturally see prices increasing. And if this can be done in a planned and coordinated way, then we can do that without putting undue pressure and without seeing price shocks. If we can't get that right, then inevitably we will see price shocks.
We've seen coal-fired power particularly unprofitable here in Australia. Is that a motivator in terms of the volatility in the market to sell the EnergyAustralia unit? And do you think there's perhaps an overestimation by the government here on the longevity of coal?
Well, coal needs to be phased out as quickly as possible. And you can't just phase coal out without having a replacement electricity supply working reliably. So it does need to be done in a coordinated and planned way. That will mean that new infrastructure is needed, that there is a case for new investment, and that has to be put in place quickly, and it has to be profitable as well. We believe that with EnergyAustralia, there is a profitable area of investment with energy storage and with the fast response capacity that you need to support more renewable energy coming onto the system. With renewable energy, it operates when the wind blows and when the sun shines, but you need that flexible capacity to make renewable energy work when customers need it. And so we see opportunities to develop that fast response storage capacity. So for us, there is a good fundamentals for EnergyAustralia. It is a sound business, it is strong, but we are looking to put a lot of investment into a market, and at the moment we're a 100% owner. So if we can find good partners to work with, then that can speed up the investment and take some of the pressure off our financial resources.
Richard, let's talk a little bit about pressure inside Hong Kong as well, because of course you have mentioned COVID-19 being one of those uncertainties that you have faced. Now we're hearing from Sintao News that Hong Kong's mass testing will be conducted with a lockdown. How will that really affect your demand picture, not to mention just your operations as well?
Well, maintaining operations is of fundamental importance. Hong Kong is a high-rise city. It's very densely populated, and the reliability of the electricity supply is absolutely crucial to daily lives and to keep the economy running. So that's been our main focus, is making sure that we have our operations running reliably, that we have the staff that are able to support the network operations. So right from day one with COVID, that has been an absolute priority for us, is to make sure that our operations are secure, that our staff are kept safe and are able to perform their jobs. This may well be the first serious lockdown that we have seen in Hong Kong. So it's something that we may be able to learn from the experience of others around the world. But it will be a very challenging period for us here, yes, definitely.